Hello, everyone. Welcome to this exclusive ESG investing virtual roundtable organized on this World Environment Day by Bloomberg Quint Brand Studio. Our topic for discussion for this virtual roundtable is ESG investing a separate style or an integral part of all investing? My name is Anupam Gupta. I'm a chartered accountant and investment research consultant and host of the Pesa Vesa podcast. I'm absolutely thrilled to be hosting this event because ESG is very relevant in today's era. We've got a great panel, and I expect an interesting discussion ahead of us. Let me introduce our panel for today. Abhay Lejawala, Managing Director, Aventus Capital, Pritesh Vinay, CFO, JSW Energy, and Ramesh S, CFO, Tata Power. Gentlemen, welcome to this panel. Thanks so much for doing this for our listeners. Let me first quickly outline this topic for our viewers. I said listeners, sorry about that. I'm just used to my podcast. So ESG stands for Environment, Sustainability, and Governance. Is ESG investing the sign of a responsible, environmentally conscious investor, or has ESG become just another buzzword in the absence of consistent, reliable, and comparable data to evaluate stocks and funds on ESG? So, buzzword or not, given the state where our planet is today, ESG investing is important, and many companies that are focused ensuring compliance with ESG practices could be the future of business. And in this virtual roundtable, we will address some important ESG challenges and opportunities. Let me start this discussion with you, Abhay. So, ESG has been popular globally for a while now, whereas it's relatively newer in India. Of late, a few funds have also been launched. So, from your perspective, from an investor's perspective, what do you think about our main theme? Is ESG really a particular style, or is it just an integral part of overall investing?
I think ESG globally has been becoming more and more popular. At the end of 2018, we had close to $31 trillion under management globally, and that's increasing at a very, very fast pace. So while it is seen or was seen as a niche style of investing up to recently, it is fast going mainstream. And the reason why it's going mainstream is because we are seeing the world shift. We are seeing financial markets shift. We are seeing a very strong convergence between corporate sustainability and investors who are looking for sustainable investment. And more than anything else, there are many risks today that we look out when we look out into the world over the next few years. Many of those risks are not necessarily the risks or even opportunities that traditional financial analysis can capture. Let's take a simple example. Let's take the example of the whole pandemic. The pandemic was a physical risk. But this pandemic, which was a physical risk, roiled markets globally, became a source of systemic risk. And, we've seen what has really happened. In the past, events that have become systemic have been financial. So this is only, giving an indication that opportunities and risks are changing. And no longer are the risks just financial. We could have physical risks. I think climate risk is the next big physical risk that we all need to look at. My conclusion to your question is that while it was a niche style of investing, it is fast growing mainstream globally. And the integrated style of ESG investing is going to fast go mainstream in India as well, because that will be the only way to generate alpha moving into the future.
Very interesting. So I'm going to come to the corporates now. We've got two of India's largest energy players here. We've got JSW Energy and Tata Power. So Pritesh, you can start this and I'll get Ramesh to add in once your answer is done. So from your perspective, from a corporate's perspective, how has ESG impacted your business decisions, right? I mean, do you, for example, have specific goals and deadlines on reaching certain milestones like becoming carbon neutral? How has this impacted you? Pritesh, you can go first.
Yeah, thank you, Anupam, and a big hello to the audience. So Anupam, yeah, ESG, to be very honest, I think this has been a shift in the making over the last few years, right? I mean, I think probably it evolved. It started as more like a risk management tool, so to say, in the sense to be able to, identify and manage risks, etc. And over a period of time, it has kind of become a really, as I completely second with what Abhay said, that this is the way things are going to be future, and essentially it's become a tool to be better future ready, for any corporate. Now, this shift in is also, so from something which was earlier nice to have, you know to a must do for having differentiated competitive ability, whether it is with respect to getting access to a cheaper pool of capital, getting access to a different pool of liquidity, getting access to a certain segment of customer base and other stakeholders, whether it is because of regulatory push. So I think that we are in under transition, and clearly that has impacted the business decisions and strategies also, because as strategic players you have to look at next 20, 30, 50 years going ahead. So if I talk about our company specifically, in the last year and a half, a number of things have actually happened. Last year we actually articulated a medium-term vision statement saying that from a current 4.5 gigawatt of installed total power generation capacity, we want to more than double our size and go to about 10 gigawatt in the course of next 3 to 5 years. But more interestingly, if you look at our current footprint, about 70% of our total installed capacity is from the fossil fuel base. Only 30% is renewable. But what we've said is this, that this entire incremental 5.5 gigawatt delta will come only from renewable sources. So essentially what we have said is this, that no incremental capital to be allocated to fossil fuel based businesses. So once we do that, the share of 70-30 in favor of fossil fuel today will reverse, and the share of fossil fuel will become only 30% of our business. Going ahead, we actually went ahead and stated that by 2050 we wish to be carbon neutral, and we have gone ahead and committed ourselves to a SBTI, a science-based target initiative for the ambitious 1.5-degree world and not the 2-degree world under the Paris climate change. So while that is a longer term vision, we actually came out with a clean power, a 10-year clean power roadmap by 2030, where we have set a host of frameworks across biodiversity, carbon emissions, water usage, etc. So yes, I mean, it has been a clear shift both in terms of the business decision and the direction in which we want to head towards.
Sure, very interesting. Those are pretty aggressive plans. Ramesh, your views on this?
No, so the ESG word was actually in many ways part of our philosophy as a group, the Tata Group. So, but then, the world had not caught on to it as a serious thing. We were always in it. And the only difference being that we also looked at what is good for the country. Now, that's where the emphasis now is really shifting from what is good for business or good for even the country to what is good for the world in general. And that's where, ESG is taking probably a deeper inroad into the corporate boardrooms. So the way, we've looked at it is, so we've been in this journey for quite some time, actually, without even kind of putting out statements. Because we were always, for example, we put up a 4 gigawatt thermal plant, and it was India's most efficient, 800 megawatt supercritical unit. Now, what that means is basically just the most efficient technology and reduces carbon emissions. Now, that comes from a philosophy that, can we do something which is probably the best in the class in the circumstances, even if you were to, guzzle out carbon, then, how to minimize. So likewise, our approach, and I think it's no more a fad. Let's be clear. It's now a question of pull factor and push factor both working. Earlier, what has happened was the management used to decide whether they want to do something nice and they would do it. Now, what is happening is that your customers, on the one hand, are pushing you to do the right things. So second is the fact that your stakeholders, whether it's your investors or your lenders, they in turn are being pushed by their stakeholders to really go green or promote investments which promote carbon, mitigation, or they are discouraging carbon emission or assets which are not in favor of climate change.
Sure.
Now, how is that playing out in corporate boardrooms? Is that your strategy now is being part of the decision making is happening through asking the right question on ESG. Earlier on, strategy was more about how do I maximize my EPS? How do I maximize my shareholder market cap and valuations? But today, the next question is, so is it a right thing to be in this business? So now the asset deployment, capital allocation, all is getting a very different aspect called ESG coming into play. That's really the reality today, whether you like it or not. Sure. ESG is no more a choice. It is more about how quickly you get onto the bandwagon. And at Tata Power, if you see my integrated report, which we have put out, you will see financials are just maybe 20% of the whole report. The rest is all mostly talking about how we operate in the community and what are we doing for getting carbon neutral. And like Pritesh said, we were the first actually to put out the carbon roadmap clearly as an energy company because we are guzzlers by nature.
Yeah. That was in fact, that was in fact my next question, Ramesh. It's great that you got up reporting. I'll ask you to lead this question and get Pritesh's view after that, which is basically disclosures, regulations, reporting. As CFOs of among India's largest energy players, where do you think India is in terms of disclosures and regulations? How mature are we? And your views on ESG reporting? You just mentioned about how just 20% of financial, 20% of an annual report is now just financial reporting. But do you think that Indian corporates can, for example, go a few steps further, maybe bring ESG into their boardrooms, form committees, have specific ESG reports? So, Ramesh, if you could just help us here, let's start with this thing on disclosures, regulations, and reporting on ESG in India.
Okay. So, first of all, SEBI has already, there is a guideline already, okay, in the business responsibility reporting. There are now emerging guidelines on how, there's a lot of guidelines. There's GRI framework. There is AS4, which is the Accounting for Sustainability, has released guidelines. IFRS is releasing disclosure guidelines. The moot point today is how much of it is being only to tick the box for the investor community and the lender community, and how much is integrated into your business strategy and operations. I think that is the bigger issue. The second is these measurements. See, the whole idea is that is your company going to be rated by P&L, or there is a P&L which is not measured, particularly only in US dollars and rupees, and it is measured in what you're doing to have a business that is sustainable. Now, I think the effort of the accounting community is to convert some of these intangible or non-financial effort, investments, and their resultant impact. How do you show that to the investor in a consistent manner? So today, that is the challenge. And I think that the whole issue is how to really balance out the importance of financial reporting versus non-financial reporting. So the current situation in India is many companies have actually started this roadmap of putting out reports with sustainability reporting as part of the annual report. But the moot question is their businesses integrating these principles truly into their business practices and strategy? Sure. And what are they doing about de-risking the current set of assets which are not exactly sustainable? So which typically for a company like ours, we'll say that, how are we going to get away from coal, which is one of the major carbon and fossil fuel-based generation modes? How do you get out of it, and how quickly and how efficiently? So I would say corporate India has begun well.
Okay.
It's a long way to go.
Okay. Pritesh, your views on that, on disclosures, regulations, and reporting?
Yeah. No, I agree with, completely agree with Mr. Ramesh. Anupam, like with most trends, what the West is doing today, Asia will do tomorrow, India will do day after. It is inevitable, right? We've seen it across, in certain cases, of course, India has gone well ahead of the curve, as well. But in this, as Mr. Ramesh rightly said, I think one very good thing that has happened recently is this, that this whole business responsibility and sustainability reporting guideline. Look, sustainability reporting in India is still voluntary, but let's look at the big picture. 41 out of the Nifty 50 companies actually make voluntary, sustainability reporting. So that's 80% coverage of your top 50 companies. The way the regulation is shifting, FY22 is still voluntary, but from next fiscal year, which is fiscal 2023 onwards, the top 1,000 listed companies in India will have to go for, the business responsibility and sustainability reporting. So that is a shift which is work in progress. That is number one. Number two is, of course, I completely agree with Mr. Ramesh that we also need standardization. There are too many frameworks, too many principles. There's, he did mention a few, TCFD is becoming increasingly important, the Task Force on Climate for Financial Disclosure. So a lot of companies like ourselves, we are in the process of currently evaluating, how to get prepared for TCFD. We are not there yet, but probably that is something we would want to adopt from the next financial year onwards. So, and therefore, I think, it is a journey. It will take time as far as India specifically is concerned. The leading companies, the top companies who have seen the writing on the wall have already started making that push. And therefore, that will evolve over a period of time. This whole ecosystem is nascent. It is evolving. And therefore, I think that we will make that transition. As a country, we'll surely in the next few years make that transition.
Okay, Abhay, I want you to first answer, same question that from an investor's perspective, where do you see ESG reporting in India? Do you think that you would probably take the few companies that Pritesh just mentioned, like 80% of Nifty companies go a step further and disclose things on a voluntary basis? So my questions for you first is your view on where India is on the reporting side, and then ESG as a style. Does it actually work in India? Does it deliver better returns?
Sure. So specifically on the regulation side, so far there has been a lot of voluntary disclosures, but with the BRSR, etc., we are now seeing a formalization. But I want to bring, one or two aspects over here, because we in India need to do much, much more on disclosures and regulation. And we need to look at what Europe has done. So Europe has done, two landmark regulations over there. One has been the EU taxonomy, which is a list of economic activities within different sectors with technical screening that kind of describe what can be considered green and what cannot, ending all subjectivity on the matter. So I think that's something that's very useful and will probably end a lot of greenwashing that generally tends to take place. The second part is, remember, it's not just disclosures at the corporate level, which is enough. We need to have similar disclosures from the asset management industry as well as to what constitutes, an ESG fund, or a fund that is focused on sustainability parameters. So once again, Europe has shown us the way. I think all of us are aware of the Sustainable Finance Disclosure Regulation, the SFDR, which was introduced earlier this year, which requires mandatory ESG disclosures from asset management companies. And they mandate that financial market participants and advisors, how are they integrating this sustainability? So the answer to the question is that in India, we are moving in the right directions. BRR to BRSR is great, but we will need to go much, much faster in terms with what I mentioned, because I think the Biden administration currently is also working on enhancing corporate disclosures. The SEC is working on that. And one hears that the SEC is also going to do something like the SFDR in the United States. So that was, I think, the answer to that. Now, sorry, your second part.
The second part was the actual, the meat, so to say, in ESG investing. Does it actually work as a style? Does it provide better returns?
So the answer is out there for us to see. If you look at the last 2 to 3 years, you look across the globe, the ESG funds have all outperformed their mainstream benchmarks. And I'm not just referring to, the MSCI Emerging Market Index, etc. I am referring to real life examples. And just look at what has happened, to renewable energy companies versus what has happened to fossil fuel producers. Similarly, companies that rank very high or are seen as being high on sustainability parameters are all getting re-rated more and more. So I think the answer is obvious. There could be time periods, maybe a month, 2 months, 3 months, short-term time periods where you probably see some level of underperformance or, things coming down. But as a trend over, a 2-year, 3-year period, we are beginning to see that the outperformance is very much there and that outperformance is only increasing.
If I can add to that, Anupam,
please, Pritesh. Yes, yes.
Said, in terms of just quantification of some data that I happen to come across, if you look at the S&P 500 in the US, in the last 10 years, the S&P 500 ESG index has actually outperformed by almost 460 basis points, compared to the main S&P 500. More interestingly, a NSE introduced a Nifty 100 ESG index, right? If you look at how that index has performed in the last 5 years, that data is in front of all of us. The Nifty ESG 100 index has delivered a 5-year CAGR of 16.7%. This has outperformed the equity large cap, the equity mid cap, and the equity flexi cap by anywhere between 240 basis points to 360 basis points. So what Abhay is saying is actually evident also in terms of hard numbers. That ESG indices. I'm not talking about the funds which are linked to that. I'm not talking about specific fund performances, but at least the ESG indices relative to the benchmarks have actually outperformed.
Yeah.
No, it's also, the funds have also outperformed. Our fund has outperformed as well. So it's just, and I didn't want to say that, but as you brought up the funds, I'd say that, there is a testimony and there's no science to it, right? Because as both of you yourselves said that, what is really good for the planet is good for the profits as well. And I think that tends to get rewarded. And I think that manifests in the outperformance.
Very interesting. We are moving from the older version of capitalism, which was shareholder capitalism. What's good for the shareholder is good for the company, to what we now call stakeholder capitalism.
Absolutely.
What's good for all stakeholders is actually good for the company. And the definition of stakeholder has now moved above and beyond just shareholder. It could be your suppliers, your distributors, a community where the company operates from, the specific factory sites. So, okay. Ramesh, I'm going to go to you here and then Pritesh with this question, that what needs to be done for long-term value creation, right? As corporates, as someone, as a sell-side analyst, for me, value creation would probably mean, a company that delivers more than its cost of capital. If your return on capital is more than your cost of capital, then there is value creation. But obviously, that's a very limited way of looking at things. But as corporates, where, can ESG actually play a meaningful and a vital role in long-term value creation for the corporate? Ramesh, I'll start with you, and Pritesh, if you can just join them.
Well, frankly, that question I've been asking myself, and it's a complicated question. From the previous thing which Abhay said, when I hear ESG funds making money or ESG companies getting better returns, sometimes it is more about where the capital is flowing and where is the rush to put money on, rather than value creation by the asset itself. So some stakeholders are getting some value because there are competing capital that is flowing in and creating. But if you really peel the onion, the real issue is that ESG is about shifting from one class of assets which were helping the world to run to another class of assets which are going to help them to run in a more environmental friendly manner. That's what is actually happening. The biggest problem, therefore, is this whole transition has to be encouraged. On the one hand, it's a carrot and stick. You have to provide the carrot by the ESG fund flow into the investment, which otherwise would not have come into play. And also the stick part, which is to also phase out the non-ESG piece of the economy. Problem is, and I have this problem today, and I think that that's happening, and we don't have an easy solution. The world is not going to transition overnight. So the easiest thing for fund managers and people who are investing is to encourage the green side, the ESG side, by putting money there. Now, value creation is happening because probably the prices of those stocks are going up because many people are willing to put money. Not because the asset is being really used, but yes, there are superb success stories. Renewables is a classic success story. India has crossed 100 gigawatts in no time. So, but the question is value creation. Value creation will come in two issues. One is the consumer now getting a product at a similar price or a better price than what he was doing earlier for the same service. Then value creation happens because then he starts to see value in buying. Today, what is happening? There are, in China, for example, subsidies led the value creation exercise. First, they pumped in money, built in those capacities, and now the world is getting helped by that capacities.
Sure.
Somebody has to first pump in, then come out. So I think value creation here is a little bit of a wheel and a cart game. Who will come first? And first, I think companies cannot create value. The companies have to take the risk of going into ESG investing. People like Abhay have to support, lenders have to support, accept a slightly lower return if that is the case, which is happening today.
Sure.
The value creation will be the next step when the scale is happening and the replacement is happening. Today in a power world, for example, we are struggling. Coal capacities cannot be replaced overnight. Everybody knows. Nobody has an answer for the next 10 years. But everybody is shunning coal. The question is that going to help you? Maybe funding them to close down early would be a better idea than to deny them a genuine requirement. So I think this is a very complicated issue. But I think, as they say, water will find its own flow. So you will get encouraged by certain positive vibes from the investors, and you will be discouraged. So you will play the game and learn it better. I think directionally we are I think there's no question that ESG investing is favorable in general to the world in the long run.
Pritesh, your views?
Yeah, no, I would obviously agree with what Mr. Ramesh is saying, because see, businesses operate in a certain environment. And if that environment starts shifting, then businesses are forced to also relook, because otherwise it's a classic who moved my cheese, right? Everybody is in a comfort zone and it's going on as it is. But what we've seen clearly is this, that, as Mr. Ramesh rightly said, that, whether it is, the flow of capital, whether it is consumer preferences, or whether it is, regulatory costs being imposed, whatever is the lever, if there is a certain nudge to move in a certain direction, and then, of course, the market starts ascribing premium to innovations because of technological developments, etc., or the regulatory costs being imposed, and companies will obviously, move in that direction. But yeah, the right balancing has to be done in terms of what you do with the legacy assets. As Mr. Ramesh rightly said, I completely agree with him, till we find a technological solution of meeting the base load demand and keeping the grid stable. How do you just, do away with the coal-fired stations, and where do you meet your base load demand from? But at least, with this nudge that is happening, there is capital flowing into innovations on that also, that can you club renewable with, storage, and there are evolutions happening on storage, so time will say, right? But the issue is this, that nothing exists in a vacuum, nothing exists in isolation, and therefore it's a whole ecosystem which has to evolve, which will always, be said existential questions on the current existing legacy assets in terms of what do you do with this, right?
Okay.
Anupam, could I come in?
Please. Of course. My next question was to your way, but I'm glad that you've come in here. Please go on. Yeah.
Sure. So all I wanted to say, I agree we have to think of the legacy assets, etc. But the urgency on climate risk mitigation is just so high that I think the whole world needs to come together and come up with solutions as to how best do you do this transition. And we've seen these two landmark events, coincidentally, both happening on the same day, one in the US and one in the Netherlands. In the Netherlands, we had the Supreme Court asking Shell to bring down its emissions by 45%. And in the US, we had activist shareholders for the first time coming on the board of Exxon. So I think the conclusions here are the risk of climate change is increasing by the day. The science-based targets are suggesting that we do not have the luxury of waiting. And I think the faster we move towards decarbonization, the better it is, because as a fund manager, I see value creation both ways. I see value creation from organic value creation, and I also see value creation from the risk of stalled assets and the risk of ESG funds or the financial investors being compelled to shun the assets which have a very high carbon footprint. So all I want to say is that I completely take into consideration what both my fellow panelists are saying, and I'm in sympathy with them. All I would like to say is that the pace of change is so fast that I think we need to find a faster transition towards decarbonization.
Yeah, I'll just come in here and,
Sure.
and Mr. Ramesh will identify with this. I'll give a classic example in the thermal power sector with these SOx and NOx norms, right? So Abhay, while you mentioned, earlier in one of your responses that, we need to move towards the way Europe is moving, where is the ability to fund all of that? When the regulators realize that the bulk of the state-owned power generating stations don't have the financial capability to make that capex to comply with the new SOx and NOx norms, and every few years the can gets kicked down the road, right? So therefore, the point that Mr. Ramesh was mentioning earlier, that who's going to be funding that, right?
Yeah.
Is capital available for that? So how do you strike a balance between these competing requirements?
Objectives? Yeah.
Very fair question. My only point here, and I don't want to. This is a question that we can have a very long debate on. All I will say is that I think we are all going to be amazed at the amount of green financing that is going to be available. And to get the green finance, you do need things like the EU taxonomy. So, one thing will lead to the other. Say, for example, if we had our own taxonomy here in India, then I feel as a financial market person that the green finance will come in.
Okay.
So, but it's a long debate.
Yeah, we're moving towards the end of the discussion. Now, just one question here for you. Do you think anything can be done to make your life easier, to make the investor's life easier, to judge ESG parameters? For example, we've got stuff like credit ratings, which help on that front. So the same thing here. Is there a framework that needs to be developed that's common that all investors can go to and judge companies?
Yeah, I think the standardization of ESG data, that's something that all of us in the financial management industry are looking for. Because in the absence of that, we are all relying currently on the rating providers. So on the MSCI, on Sustainalytics, and all of them are fantastic, undoubtedly. But each one has their own way because the toolkits, the toolboxes are different. And finally, it's all about subjectivity over here. So what I think me and I guess all the other ESG fund managers will probably agree with is we would like to see more standardized data. And I think here in India, the BRSR is a step towards that, because if 1,000 companies have to disclose the kind of data that SEBI wants them to do, I think the companies are complaining about the compliance issues and the huge amount of workload. But I think, on the fund management side, we are rubbing our hands in glee because we are now going to have, 1,000 companies disclosing this similar data. So, it will give us some very, very good information. It's not going to be easy, but if you ask me what would make my life easier, I would say probably more standardized data. And I think, SASB, etc., they're all working on frameworks. So my sense is that as we see more formalization in ESG, because, let me be very frank, up until last year, all over the world, ESG was kind of a box ticking exercise because you were relying on voluntary disclosures. You did not have something like the EU taxonomy. So, anyone could say anything and call themselves green. So as the formalization is coming in with the taxonomy, with the SFPR regulations, and in India, the BRSR, etc., I think we are all going to get far more formalization and far more information, which will make ESG, less, how do you say it, based on voluntary disclosures. So my sense is that the next 3 to 4 years are going to be very, very interesting.
Excellent. I guess that means larger Excel files for us to put in all that data, I guess. Okay. Gents, we are wrapping this up. My last question, the future of ESG. Ramesh, I want you to go first, Pritesh, and Abhay, if you could, talk about ESG in general and ESG investing. Ramesh, with you first, the future of ESG in India.
No, so I think this whole climate change thing is now serious business. I agree with Abhay. I mean, it's no longer any fad. Okay, it's a survival issue. The future, as I see it, I think it's a challenge now. Investors, lenders, stock markets, and corporates, I think have to move away from the metric of pure financial success as the way to calculate the value of a company. Today, all these guidelines are okay. You can have 500 pages of annual report. Who's going to read them? People generally say, what is your PAT? What is your EPS? What is your CAGR return? What is your ROC? What is your ROE? Beyond that, is there an ESG index today on top of our minds? No. Is there an index which is now considered as for the indices itself to calculate the stock exchange indices? Not yet. I think the future is to institutionalize some very key metrics, partially financial, partially ESG focused as some weighted average, but that should become core for investors, observers, any stock exchange index. Somewhere it has to become institutionalized. That is bound to happen. Otherwise, these will remain. Disclosures are always secondary to the core decision making, and then it goes back to the investors and the fund managers to see that are they being rated on the return on equity only. Today they are. So it's only that they've created, in my view, and crudely put, separate channels where the ROE expectations are different because the purpose is ESG. But the fundamental point, can we change the fundamental business index to a ESG specific or ESG heavy component? I think that will make behavioral change.
Very interesting. Pritesh, your views on this?
Yeah, no, I agree with Mr. Ramesh, but I only think that, that pace is going to be slower, So for example, we already have globally, more than 3,000 signatories to the UN PRI, right? And now a number of Indian asset managers are actually also signatories to PRI. So that shift has started, but these are only asset managers. As Mr. Ramesh is rightly saying, the other providers of capital, lenders, your rating agencies, even the financial rating agencies, credit rating agencies. We are already seeing that shift in the capital markets. Actually, we missed one important segment of pool of liquidity, which is the bond market. While we've seen equity markets do reward, it is staggering. Calendar year till date, in Asia alone, more than $30 billion of green or social or sustainability linked bonds have been issued. Wow. And the previous annual peak was in 2019, which was $25 billion for the entire 12-month period. This has happened in the first 5 months of this year. And good for our country, while historically green bonds in Asia have been led by China and Korea, which between them have accounted for about 50%. This year, about 16% of the total issuances are from Indian entities, So therefore, what I'm saying is this, that the bond markets, there is a pool of liquidity available, a green bond or a sustainability linked bond liquidity, which is giving, which gives you better access at a lower cost of capital and all of that. So that shift is happening, but it is too tiny, in the overall scheme of things. So
Yeah.
I don't really see. I completely agree with Mr. Ramesh that that kind of standardization is needed, but I don't see that immediately. Probably once this BRSR is standardized, which is only fiscal 2023, and you have a lot of standardized data available, when you will see the rest of the ecosystem in terms of providers of capital also shifting towards that.
Great. Abhay, final word. Future of ESG investing in India.
What do I say? All I will say is that it is, there is no choice. ESG or integrated ESG is going to become mainstream. And it's going to happen far faster than we think. So while we have started late in India, we are probably going to be hitting the ground running on it. Because, again, from a financial investor perspective, the foreign institutional investors are, all signing on to the mandates. And now I think there would be probably a handful who have not embraced integrated ESG. So we are already seeing the behavior in terms of the company selection. And now I think with more and more domestic institutional investors also embracing ESG, I think it's going to go mainstream. So look at this discussion we are having. We are having such a mature discussion from the corporates. So this only shows how fast it is moving. I'm quite sure that 3 or 4 years ago, I don't think we would be having such a mature discussion.
Absolutely. I agree with that.
So I think it's going to move very, very fast. And I'm extremely encouraged because all the pieces of the jigsaw are falling together. The companies, the regulators, the investors, and the asset management companies. So it's going to be very fast.
Yeah, and imagine that. I mean, we're having this on World Environment Day. I remember in my days as a sell-side analyst, I don't think anyone would even know what is World Environment Day. But the fact is that the environment now is becoming an increasingly important factor to consider, both from a corporate perspective, as our guests have told us, and from an investing perspective, as Abhay has told us. But that's all we have time for. Thank you to all our guests. I'm going to summarize the key takeaways that we've done in this last almost an hour of discussion. ESG is becoming mainstream. Companies are aggressively moving towards specific targets. Pritesh gave the example of JSW Energy's incremental investment in thermal. Reporting is also improving gradually. 41 of 50 Nifty companies do voluntary disclosures. Top 1,000 companies are actually going to go in for BRSR, business responsibility and sustainable reporting, in the next few years. Although in terms of disclosures, more can be done. Look at Europe for regulation. When it comes to ESG as an investment style, definitely works. ESG outperforms relative to the benchmark. When it comes to long-term value creation, it will take some time because legacy assets are going to take time to get transitioned. But believe me, our guests have told us that directionally we are on the right track and things will probably move sooner, faster than slower. Because ESG has gone from a box-ticking exercise last year to increasing regulation more now towards disclosures, right? So when you talk about the future of ESG, I think metrics, reporting, disclosures will have to be institutionalized, and that will become core, key, and critical for investors, observers. All will have to be involved into this, and it will be important for them. And as Pritesh pointed out, that all the reporting in the world also needs to be supported by pools of capital, right? And you've seen that happening in equity where green companies have raised money. It's also happening in debt. He gave the example of a Southeast Asian neighbors like, I think, China and South Korea, which have raised significant amounts of money via debt for green funds. And it's happened in India also. So folks, that's it. ESG investing. And as Abhay wrapped it up for us so well, ESG investing will become mainstream, and it's going to be faster than slower for all of us. So my thanks to our guests today for sharing their insights. My guests, Abhay Lejawala, Managing Director, Avendus Capital; Pritesh Vinay, CFO, JSW Energy; and Ramesh, as CFO, Tata Power. And thank you so much to all our listeners and our audience for joining us today. Thank you for being part of the BQ ESG Investing Virtual Roundtable, powered by Bloomberg Quint Brand Studio. Thank you.
Thank you. Thank you very much.
Thank you. Thank you very much.